Oh, welcome lads. Today we're having a wee look at my UK dividend portfolio. It's brand new, fresh. I only did it today and I only bought all the shares of all the companies today. So this is quite literally the first episode. I'm going to be keeping track of it, adding as I go along. And the main difference is it took me a few months to save this up. So it's £532.67 that I spent on the first round. Now, the reason it came to that value, it wasn't because I didn't just have 500 in the dot. It's because I don't actually like when the shares go into like decimal values. So on Trading 212, you can buy them and get like 1.6 shares. I just wanted whole numbers the whole way. And you'll see the sort of breakdown of the portfolio. And hopefully it not only makes it easier for you to understand, it makes it easier for me to input it into my portfolio tracker, which I'm actually going to have on Dividend Watch. Now, I normally talk about Dividend Max. I love Dividend Max for analysing dividends individually, but I love Dividend Watch for just giving me really cool calendar charts, if I'm being perfectly honest. Tells you when the dividends are going to be paid, confirmations and whatnot. So, let's have a wee look here. I currently have 19 holdings and I have them relatively balanced. Now, the balance will change in the coming months. This was the first month. Majority of these, I just bought a single share and they ended up being where they are in the position of the pie. So let's have a wee scroll down and see what we're rolling with. So currently my two biggest bits in the pie is Royal Mail and Airtel Africa. Done videos on both. I will talk a wee bit later in the video as to why I picked them. I also picked Unilever. It sits at 7%. Diageo, a drinks company. We've got Land Securities Group, a UK REIT, real estate investment trust, REIT. We have Tesco's, the supermarket, GSK, GlaxoSmithKline. They actually recently spun off their consumer healthcare business side of the business. So the dividend might take a bit of a hit. I think it's called Haleon, and I got a few shares. I sold them though because I want to hold back and see how it performs over the next month or two. There are talks that the dividend will be paid. I might do an upcoming video regarding that, but we'll move on. Imperial Brands, tobacco, big dividend payers. So obviously they feature on the profile. Persimmon, they're house builders, big dividend payer as well. I think they're like 12%, which obviously anytime you see a dividend kind of approaching 12%, you do have to ask certain questions as the longevity, how long you would hold something like that. But next, it's the BHP group. Now, if anyone watched my Rio Tinto or BHP videos, you know that I'm not a fan of mining because I'm a fan of mining. That's the industry I actually work in, demolition equipment and all. We supply to quarries and whatnot. But BHP and Rio, their dividend it's up, it's down, it's up, it's down. But I thought about it, and the more I thought about it, looked at the balance sheets and whatnot, and looked at the numbers, I believe mining has a place because they're really getting into lithium and all the metals that will be required for like the electric cars and whatnot. So I was very interested and thought, you know what, they should feature. Picked them over Rio. They are slightly bigger. And BHP, at least on their website and upfront the relations, they are going pretty hard into those sorts of metals, as is Rio. But at the end of the day, you make your choices, and I picked BHP. That was mine. We have Relax, which is like an information processing company. I talk in the video as to what they do, but to say it right now, I can't. It's not that I can't remember. I don't know how to explain it. It's analytical software and whatnot for big companies. Since Thomer, chemicals company, make quite a lot of equipment. They're a bit similar to 3M, a US sort of dividend company. Well, at least I hope they're similar to that. I'm trying to think. I think they are. We have Shell, so obviously you have to feature a wee bit of oil. I think Shell will eventually grow to encompass more than 4%, which is pretty low down, although most of them's 4%. So I've left most of them equal. And then I've obviously Royal Mail, Airtel Africa. They're the biggest at the moment, but this portfolio will change. Companies will come, companies will go, depending on my feeling, the market, and just generally as things go on. So let's continue on. Now, here's one of my favourite ones, Greencoat UK Wind. When I first started getting into dividend investing, I stumbled across UKW, that's their ticker symbol. And I love them. I love what they did. It was just, they predominantly, as you might be surprised, wind energy, and responsible for a few offshore wind farms and whatnot. And that's been actually quite a boom to the economy in Northern Ireland down at the docks. So, and I believe I eventually researched that was their wind turbine. So, quite cool. They're a brand new dividend pair, but their dividend is actually very nice, and it's growing year on year at the moment. So, I thought we dividend growth stock, maybe I spotted it and it looks quite good, and I'm in early. It might be the case, who knows? Let's go on to the Burberry Group, luxury clothing. I've looked at their stuff. I couldn't justify paying it. My portfolio was probably my starting portfolio here is probably the value of one of their shirts. Maybe I'm insulting the shirt. Maybe the shirt's worth more. But yes, they feature there a good dividend growth stock, and the brand seems to be very, very strong in the UK market. So here, why not? I wouldn't buy the shirt, but I tell you what, I'd buy the stock. On to National Grid. They control most of the UK's grid, electricity and whatnot. And I actually think a bit of the American, East Coast of America. I'm trying to remember. Obviously, every single company and remembering every detail is a bit difficult, but they are a solid dividend growth stock, and their model's pretty robust. I think they have a pretty big moat. In the sense of there's really no one else that's going to take them on at the moment. So, let's move on to the Vodafone Group. Now, I had BT here, but I had to make a really, really big decision. Do I pick Vodafone or BT? Because both their stock prices don't look exactly exciting for the next while, and both revenues are going down, at least for BT. So in the end, I picked Vodafone because I think Vodafone has a few other avenues that they could go down, especially with the rollout of fibre and all over here. And I'm with their business contract for their phone, and their 5G rollout is very important over here to me as well. Because once it gets to the house, I might even be able to stream and whatnot. So that's pretty exciting. So they feature sitting down at 2% on my portfolio. They may increase into the future, but I'll have to see. We have Pearson. Pearson is basically, they have I don't want to say a monopoly, I don't want to use that term, but they more or less are the educational authority in the UK for tests and examinations. Considering they have such a dominant position in that market, a bit like National Grid, and looking at their portfolio and their dividend sort of over time, they are on my portfolio. Smith and Nephew was one that I never actually would have knew about unless I started doing my dividend videos. See, they are medical equipment manufacturers. A lot of you that may have watched nearly all the dividend videos, fair play if you have, lads, may know what all these companies do, and I'm just doing a quick overview. But Smith and Nephew here, medical equipment, again, very, very specialised, very good revenues, and dividend to boot. So yeah, that's the portfolio and its breakdown on Trading 212. So what are we going to do today is we're going to pop on over to Dividend Watch. Okay, let's close that window there. Yep. So Dividend Watch is another website. There's many. There's 100 odd websites you can use for dividends, for tracking portfolios and whatnot. Some of them you have to pay an annual charge, and I'm like, no. I'm looking at you, Dividend Watch. It's like $199 for the year, and I was just not doing that. That's like half of the portfolio. But yeah, I've used Dividend Watch now. Obviously, because I'm doing this channel, because I'm obviously not living off my dividends. Like, it's in the future, you never know. But I just like them to be part of my dividends. Are part of my portfolio of general income sources, so they're just part of that portfolio. I have bought the premium. Now the premium is $7 a month. I'm not trying to sell you it. I'm just saying I use it for my channel. There will be a link in the description, in the comments section. And if you click the link, and I think you get 3 months free premium, and I get 3 months free. So that's completely optional. I hate more than people trying to sell stuff. especially in sort of a lot of the financial channels. I'm literally just saying, if you click that link, you do get here. It is like a referral link, and I do benefit, and you do get 3 months free. But to be honest, if you were just starting out or doing anything, you can use the free one. You can track 10 products. You don't have to use it. You can just simply type in Dividend Watch, and you can use the free one. Just sign into your account, use the free one. So yeah, that's all the financial advice I'll give on that, is use the free one if possible. But the link's there if you want it. Going on to the rest of this, the thing I love about it now I'm going to sell it to myself at the moment, because, you know, I'm the one paying the £4 or £5 a month for it, is you have this lovely looking dashboard. Now, it will eventually generate a chart, and the chart is also very intuitive, very easy to use, and very, to be honest, aesthetically pleasing. That's why I really love this. So, portfolio value currently sits at 530 sterling. Now, beta volatile, I'm like, I don't know what that is. Yield on cost, well, it's not really moved at all. Annual dividend income sits at around £30. So 530, and dividend income's about £30. You divide that by 12, you're looking at about £1.50, £1.60 a month. That's about $2.50, I think. So something around there. Total return, I'm up 0.04%. Now, obviously, we'll see as time goes on where that goes. The average pay ratio is 1200, which I think there's something broke there, because I believe this website is more geared towards like US stocks, because most of the US stocks actually have their logo and more accurate dividend yields and all, because I think a few of these are a wee bit wrong. It does say dividend yield averages out at 5.63%. I think it's wrong, because I think it's overestimated the dividend yield of a few companies here. But I did it personally using Dividend Max and Trading 212, and I got it to about 5.3, 5.4%. Some people would say that's a high dividend yield. Realistically, maybe a slightly lower one tends to mean you're going for slightly safer companies. But listen, this is a diverse one. I'm across many industries. Sometimes that's not a good thing. Diversifying, you know, it's a double-edged sword at sometimes. You know, because obviously if you invest in fewer industries, and those industries where you're correct on your assumptions and they explode, obviously the returns will be a lot higher. I want to be across several industries, as I am more or less starting out here. I want access to a good few markets. So plus these are companies that I've looked into personally, and I have obviously a good bit of faith in them. And over the coming months, as I put more into the portfolio, and then eventually move on to opening the US one, as the US portfolio as well. Hopefully on this wee journey we'll grow together and find out more about dividend investing. The thing I really want to make clear about sort of this series is, you know, the portfolio is £530. Now, obviously, to some people, that's nothing to laugh at. And then to other people that, you know, you watch the videos, it's like, oh, portfolio of £120,000. Just like, whew, that's like most people's mortgages paid outright. And that's fair enough to all them. I'm hoping to give at least more of a, I don't want to say normal person, just not a ultra wealthy. Even people with 100k in dividend stocks aren't necessarily ultra wealthy. I suppose the point I'm trying to get across is, I hope this is somewhat, you know, a good wee journey to be on. It's a low starting amount. I'm not going to magically appear with 100 grand. Although if I do, I won big on a scratch card or on the lottery. You never know. But yeah, instead of buying a lottery ticket or a scratch card, I could just invest it. You know, that's it there. So yes, let's have a wee look at the calendar here now. This is another wee feature of Dividend Watch. You can see here on the 20th of July, the ex-dividend date is for Royal Mail. Now, not much else is happening in July, because obviously we're nearing the end of July. Let's move on to August, see what exciting things happens. Imperial Brands and GSK are on the 18th, and then Land is on the 25th. I have missed most of the of the ex-dividend dates for the middle of the year for quite a few of these companies, so I probably won't see many of them for a few months, but that gives me a lot of time to build up more shares before their next ex-dividend date. So you got to think ahead, lads. You got to think ahead. Let's go over to dividends here. Now, you can see, I love the way this looks. So in in August, we obviously know that it's estimated here there's Shell, Greencoat, UK Wind, and BHP are going to be paying out. Then we have in September, we have Unilever, we have Imperial Brands, and we have Royal Mail. Now, obviously, two of them are confirmed, and they sort of, on the wee chart here, when they're confirmed, it's the darker blue, and then the lighter blue is obviously, it's either not confirmed or we missed the ex-dividend date. So we'll find out as it goes along, and it keeps a track of that for you. So we'll be making £4.56 in September, £1 in October, £1.77 in November, £1.70 in December, and then we can click over to diversification. Now let's see what I am across here. Communication services, mainly because I have Airtel Africa. Now they are very similar to Vodafone, but based in Africa. Now Africa is obviously an emerging economy, a really heavyweight emerging economy. So I mean the whole sort of continent as a whole. They're the biggest provider, I believe, in Nigeria and Kenya, two of the most populous countries in Africa. So I've been looking at their numbers, I've been looking at their advertising and everything, and I'm very happy and very confident with our future, at least sort of the medium term. So I'll be heavily investing into them. From a personal view of just looking at all the numbers and having a wee deep dive on their website and their investor relations. I'm happy with them. Their dividend looks like it's going to consistently grow for another while yet, so it's looking good. All right, obviously the other ones is Relax with Vodafone and Person, yeah. The education one. So they're placed in communication services, which is close enough, I suppose. Consumer defensive is where we swap over to the likes of Unilever. So obviously they do the likes of Lynx, Ben & Jerry's. You walk into a supermarket here in the UK, heck, even some most in America as well, you will come across their products. Diageo, they are massive outfit when it comes to alcoholic drinks. So we're talking Guinness, vodka, and whatnot. And then the places where they sell them, Tesco. So technically you've got quite a few layers to that yummy dividend cake. And then Imperial Brands are the cigarettes. Now industrials, they've actually put Coke or Royal Mail into industrials. I'm not sure I totally agree with that, but when it goes over to industry, they swap over to integrated freight and logistics. That's where Royal Mail is based, RMG. So that sounds about right. As well for the other sectors, we're in basic materials, so obviously we have the chemicals side of things with St. Sommer, and I've got the mining, so that's touching two major industries alone there. The real estate, I have Landsec, I have a wee video on them, ticker symbol LAND. Decent enough wee dividend. It's mainly the properties they own are, I had a look through quite a lot of their portfolio. It's quite diverse, and it seems to be a really good catchment area, and obviously emerging from the pandemic, hopefully all their properties, continue to go up in usage and value and rental and whatnot. Consumer cyclical, PSN, that's Persimmon, and we have Burberry, so that's where they are based, obviously house builders and a luxury brand. Healthcare, GSK is there alongside Smith and Nephew. Energy, we just have Shell at the moment. Now, obviously, I will be looking in. You're probably wondering, where is BP? Well, I compared Shell and BP, and to be honest, Shell was the winner for me outright. So Shell's the one that I'm putting my faith behind. That's just the way it is. Despite BP being the main thing over here that I would... But I don't even use BP. I use Maxol, which is one of the petrol stations here. For all I know, they get off BP or they get off Shell. I haven't done that deep a dive into it. It's on occasion, I base my investments off what I use in real life. So if we were to go off that, we have Royal Mail I use for all my postage on my eBay side of things. We have Vodafone. Well, I have a business contract with them, so obviously I'm very familiar with them. And let's see, who else is on the list there that I would know personally? Well, Diageo, I drink most of their drinks. Burberry, I don't own anything. BHP, I don't, I'd be familiar with the industry somewhat, not mining all in, but just some aspects of it. Let's see. Well, National Grid, obviously I do use National Grid, by default. Tesco's, I would shop in Tesco's quite a bit. Also Asda, which means if I was doing a US portfolio, I would have looked into the Walmart family, but Walmart actually sold Asda, their UK arm of, they sold Asda to a company based over here that owns quite a few petrol stations about the place. Greencoat Wind UK, again, that's sort of an older, from my earlier days of learning dividend investing, I'm very happy with them. Unilever, well, obviously, their products are pretty much recognizable across the board. Back over to diversification, let's see, yield. Now, 53% of a higher yield of 4% or more. Some people would call that more risky, as you would probably want more lower to medium yield ones. Go big or go home, I guess. Again, none of this is financial advice, so I'm going to say it as it is. Type, obviously, they're all stocks of no ETFs or anything. I like I like micromanaging things a bit. Let's see. Yeah, I suppose if you go to industry, obviously with telecoms, with freight, we have household and personal products, beverages, REITs, publishing, grocery stores, specialty chemicals, mining, oil and gas, residential, tobacco, drug manufacturers, luxury goods, asset management, medical devices, and utilities. Like, that is, like, no particular industry takes over 18% of the portfolio, which to me sounds really fair and balanced. Now, when it comes to the US portfolio, things might change up a wee bit as, I lean towards my more preferred industries. I think I'll be heavy weighted towards 3 industries once I do my US one. But in the meantime, this has been my wee overview of my first UK dividend portfolio. Let me know what you think in the comment section below. I always enjoy chatting away to you, lads. I do have another channel if you want to click on. It does primarily gaming, Lord Plays, and then there's my other channel, Lord, that does mainly Fallout and Elder Scrolls locations and lore. So I also diversify my YouTube that I do. So if you've enjoyed listening, thanks so much. Thank you, of course. And I will have links for Dividend Watch down in the description, as well as Trading 212. Both of them are affiliate links, so obviously if you click either of them, you benefit and I benefit. Again, it's not to sell it to you. If you want to click it, you can click it. If not, it is what it is. Have a great morning, afternoon, or evening wherever you are, and I'll see you all hopefully in the next update. Thank you. Bye bye.